As of today, Tuesday, January 27, 2026, at approximately 12:48 p.m. Eastern Time, Datavault AI Inc. common stock, trading under the ticker symbol DVLT on the NASDAQ, is currently priced at 0.71 USD. This represents a decline of 0.043 or 5.66% during the intraday session. While a 5 or 6% move might seem like a standard Tuesday for a high beta tech name, the reality beneath the surface reveals a much more complex tug-of-war between institutional expectations and the cold, hard reality of retail sentiment. For many looking at the broad market, there is an expectation that any company with AI in its name should be riding the coattails of giants like NVIDIA stock, or even the refined software ecosystems of Apple stock. However, the reality for Datavault AI today is a stark reminder that while the narrative of data monetization is incredibly compelling, the execution and market reception for microcap companies often follow a much more volatile script. What investors did not anticipate this afternoon was the lukewarm reaction to the company's recent strategic push into the Asia-Pacific region. Just yesterday, Datavault AI announced a memorandum of understanding with St. John's University in Taipei to establish an international research center focused on real-world asset tokenization. On paper, this is exactly the kind of global expansion that should bolster a growth story. The expectation was a rally fueled by the prospect of entering a tokenization market projected to be worth billions by the end of the decade. Instead, the reality has been a sell the news event, with the stock sliding as traders weigh the long-term potential of Taiwanese research against the immediate pressure of recent share issuances and insider activity. When we look at the broader landscape of online investing today, there is a common belief that we are in a period where small-cap AI plays will eventually be consolidated or experience a massive breakout similar to what we saw with Tesla stock in its early years. Many users on platforms like Robinhood or those managing an individual brokerage account are constantly searching for that next multi-bagger. But here is the contrarian take. Datavault AI is currently fighting a battle of credibility. While the company is busy acquiring assets like API Media Innovation to scale its data monetization ecosystem, the market is fixated on the fact that these moves often come with dilution. The recent acquisition of API Media for $14 million in cash and stock is a decisive step for the business model, yet the stock price has struggled to hold on to gains made earlier in the month. This suggests that the market is no longer willing to trade on press releases alone. It wants to see the conversion of these partnerships into tangible, recurring revenue. If you are looking at your portfolio through the Fidelity mobile app or checking your intelligent portfolio on Schwab, you might notice that the volatility in DVLT is significantly higher than your average index fund or even high-growth Fidelity ETFs. This is because Datavault is operating at the intersection of several high-stakes technologies: blockchain, artificial intelligence, and experiential multimedia. The sheer ambition of their ADIO technology, which aims to monetize data through audio and interactive engagement, is enough to make any smart friend curious over coffee. But the reality is that the company is still reporting significant net losses. This creates a psychological tension for the investor. On one hand, you have analysts from places like Maxim Group raising price targets to 4.00 USD, implying a massive upside from the current 0.71 level. On the other hand, you have the reality of major shareholders like Silex Holding Co. disposing of millions of shares in the open market recently. When a major insider sells over 10 million shares, it sends a signal that can easily drown out even the most optimistic research report. The trading volume today has been telling. We are seeing about 39 million shares move, which is actually below the frantic levels we saw earlier in January when the stock was pushing toward the 1.00 USD mark. For those using the Interactive Brokers platform or SoFi Invest to track institutional activity, the lack of a strong buy-the-dip response at these levels indicates a wait-and-see approach. People are questioning if the floor is really at 0.70 or if the downward trend from the 52-week high of 4.10 is going to continue. It's a classic case of expectation versus reality. The expectation was that the 2026 fiscal year would be the breakout period for their proprietary data exchange platforms, like the NIL exchange and the political exchange. The reality is that the ramp-up for these platforms is taking longer than the retail market's patience allows. Comment below how many shares of Datavault AI you currently hold, or if you are waiting for a specific technical level before entering a position. It's always interesting to see if people are using their Robinhood app to trade the daily swings, or if they're tucking this away in a Fidelity IRA for the long haul. To understand why the stock is behaving this way, we have to look at what Datavault AI actually does. They position themselves as a leader in the Web 3.0 environment, focusing on the valuation and monetization of data assets. Think of them as a data quarterback. They have a cloud-based platform that uses supercomputing capabilities to provide what they call experiential data observability. Essentially, they want to help companies turn their raw data into a liquid asset that can be traded, valued, and monetized in real time. Their acoustic science division, which includes the WISA technology, is particularly interesting because it targets the home theater and consumer electronics market. They're trying to bridge the gap between high-end audio and the data-driven world of AI. However, the historical performance has been a rocky road. Looking back at older reports, the transition from being WISA Technologies to the current Datavault AI identity was a significant pivot. The company had to deal with NASDAQ compliance issues regarding minimum bid prices and has been active in raising capital to keep the lights on during this transition. This history of capital raises is why you see such heavy volume and price sensitivity today. Investors who have been around for a while remember the 52-week low of 0.25 USD, so seeing the stock at 0.71 still feels like a win for some, while those who bought in near the 4.00 USD peak are feeling the burn. This is the danger of chasing the AI label without looking at the balance sheet. While SoFi active investing users might love the growth story, the debt-to-equity ratio and the cash runway are the real metrics that will determine if this company survives to see its 4.00 USD target. If we look toward the future outlook, there are several catalysts on the horizon that could either validate the bulls or sink the bears. The establishment of the research center in Taiwan is a long-term play, but the more immediate impact will come from the integration of API media. If Datavault can prove that their ADIO technology can generate significant advertising and data revenue from live events, we could see a rapid shift in sentiment. We also have to keep an eye on the broader macroeconomic environment. If the Federal Reserve continues to signal a stable or easing rate environment, high-risk growth stocks like DVLT often benefit as investors move out of cash and back into the self-investing arena. However, the risk remains that the company may need to go back to the well for more capital. Their short-term assets currently don't cover their short-term liabilities, which is a red flag for anyone using investment help or professional fidelity wealth management. In a world where you can get a steady return from safer bets or even diversify through Fidelity mutual funds, a micro-cap AI play has to offer something spectacular to keep people from hitting the sell button. The tension here is that the technology seems to be ahead of the market's ability to price it correctly. If the data monetization market in Asia-Pacific truly reaches that $2.5 billion projection by 2030, then 0.71 USD will look like a gift. But if the execution fumbles, or if the sell the news trend continues every time management makes an announcement, the reality will continue to fall short of the lofty expectations set by the AI hype. Comparing this to the giants like NVIDIA stock provides perspective. NVIDIA is a hardware play that provides the picks and shovels for the AI movement. Datavault AI is trying to be the refinery that processes the gold. It's a much harder business model to prove because it relies on changing how companies value their internal information. For a small player on the Robinhood stock trading platform, this is the ultimate high-risk, high-reward scenario. The volatility we see today, with the stock moving over 5% on a relatively quiet news day, is just a symptom of that uncertainty. In summary, the story of Datavault AI right now is one of a company trying to outrun its financial history with a bold new technological narrative. The live price of 0.71 USD reflects a market that is skeptical of the sell the news pattern we have seen lately. While the expectations of a $4 price target remain in the minds of analysts, the reality of insider selling and the need for more revenue is keeping the stock pinned down for now. We have seen significant institutional shifts, with some like Vanguard reducing positions, while others like